What's going on, y'all? Happy Tuesday, and welcome to the latest episode of Hashing Out Livestream. I'm your host, Colin Harper, head of content and research at Lecture Technologies. And for those of you who tuned in yesterday, we apologize for the inconvenience. We had some technical difficulties. My mic was not working. It is working now. Let's hope that it stays active during the live stream so that we can get to the topics that we want to cover today, which are obviously the usual network data and Bitcoin mining metrics. We're going to be focusing on what's going on with hash rate today, as well as what that means for hash price in the future with the next difficulty adjustment. And then we'll wrap up with some news, looking at the latest with the Compute North bankruptcy filing, Celsius's own bankruptcy, and its troubles with Compute North, Core Scientific currently in a lawsuit that it is going on with Compute North versus Celsius. And also, we're going to give a shout out to our friends at Aspen Creek for their Series A to round off the show. And with that, let's go ahead and get right into it with some network data. So before we look at hash price, I want to start with taking a quick look at Bitcoin's 7-day network hash rate, which is going absolutely freaking parabolic right now. This is actually kind of more timely. I'm kind of, in a way, happy that the live stream got delayed because there's even more to talk about with this. Because yesterday, when I was about to dive into this analysis, Bitcoin's hash rate was about 244 or 245 exahashes a second. But right now, it is as high as 251 exahashes a second on the 7-day average. Now, if we look back on the 7-day, we can see that 7 days ago, Bitcoin's hash rate was 225 exahashes a second, and it has risen since by 25 exahashes over just the course of a week. Now, for those of you who don't track these things as much, that is a huge move in a very short amount of time. Now, obviously, new machines being plugged on has everything to do with this, as well as maybe some farms that had to power down during the summer, powering back up after they were moving, or perhaps, the weather was a little bit better for them and they didn't have to curtail like we saw in Texas and other parts of the US. But a lot of this is new capacity coming online from S19 XP orders and other new gen hardware like the M30S++, M30 series, and the S19 series. There are a lot of S19J Pros and S19 XPs and M30S++s and M50s that were on pre-order, and some of those are starting to hit racks over the last month and clearly over the last week or so. So what does this mean for hash price? Well, hash price is actually looking pretty good after the most recent difficulty adjustment that hit last week. The difficulty adjustment was about 2.14%, I think, and took us the network difficulty down to 31.36 trillion. And as a result, hash price is back above 8 cents per terahash per day. It's also getting a lift from Bitcoin's price, which has risen back up to 20,000 at the time of this live stream. Now, all of that being said, given the current hash rate that we have from all of that new equipment coming online during this time, then that estimate could be less. If even more hash rates gets added, though, we're only halfway through, it could be even more. But that being said, anything really above 5% is dangerous territory, and anything above 10% is absolutely nuclear. So given the potential for this 11 to 12% difficulty adjustment, needless to say, it's gonna be tough for a lot of miners. It's not what we really want to see, and depending on what Bitcoin's price is, it's probably going to drive hash price down to all-time low territory, which is in the about 7 cents per terahash per day range. So all that being said, happy that people are getting hash rate put online. And on one hand, great for the network and good for them. But as a miner myself, not really too thrilled to see what's going on with this chart. And also kind of complicates some people's end of the year hash rate predictions, no doubt. Luxor's CTO, Eddie Wang, and I were everyone's calling us the hash price bears with our Q2 estimates for our Q2 report. and we said it was going to be somewhere in the ballpark of 250, 260 exahashes. Looks like we're getting to that already, and very conceivable that we see 270, 280 before the end of the year. Of course, all of this changes depending on economics, right? If Bitcoin's price gets cut in half, we're going to see more hash rate come offline. If it soars from here, then we'll see more hash rate come offline. So something to keep an eye on. And jumping over to the Asic Index data, we're starting to see rigs come down again. Last week during they've been coming down, but the selling accelerated last week. As you can see, the new gen hardware, the under 38 joules per terahash bucket is officially below $30 per terahash per day. The mid-gen bucket, 38 to 68 joules per terahash, is below $20 a day, even though just barely. And, these are just the listing prices. The clearing prices for some of these things are for certain orders, depending on the size and things like that, are no doubt much lower than this. And to kind of just add color to this analysis, I'm going to pull up our ASIC brokerage business really quickly, so that you can see, on our ASIC trading desk with some of our sellers, we're seeing prices even lower than $29 per terahash per day for new gen hardware. For instance, you can see some of these S19J Pros are going for $21 per terahash. That's coming. That's one. That's an MOQ of one that's coming out of Shenzhen in Hong Kong. We got another one for $27 per terahash that is here in the U.S. Now you kind of expect to see a premium here in the U.S. because it'll usually get to you a little sooner. Also, you don't have to pay tariffs on the hardware that you're buying, right? For stuff coming out of Asia, it is still 25% thanks to the tariffs that Trump slapped on during his term. And so you're going to see usually hardware being priced down a little bit of a discount compared to U.S. hardware. But as you can see on this page, we've got a lot of machines that are going for anywhere from $20 to, this M30S is $20.50 up to about $27 per terahash. Then we also have S19 XPs for anywhere from $39.50 to $43.50 per terahash. So interesting to see what's going on in the ASIC market right now. Assuming that hash price continues to dwindle from here, we expect these prices to continue to fall as well as they approach their own all-time lows. And it's anyone's guess as to where they settle, but it's as I keep saying in each live stream, it's a pretty safe bet that we'll see lower prices from here. Obviously, a rally in Bitcoin notwithstanding. If that happens, then all bets are off. Definitely recommend y'all check this out if you're looking for hardware. We've got some great prices, and like I said, MOQs of one for a lot of these rigs, more than we usually see. So definitely check it out, brokerage.luxor.tech. And just one last note on this, as you can see, the above 68 joules per terahash, it's not really moving that much. There are not many old gen rigs being circulated right now in the resale market. As such, we will likely retire this band by the end of the year. And this month, we should be adding a new band to accommodate the S19 XP. It'll be I believe it's, I might be misspeaking, but I'm pretty sure it's under 28 joules per terahash will be that band. It might be under 30. But all of that being said, keep an eye out for that because we will be adding that band here pretty soon, and it will accommodate the S19 XP and future hardware that is of similar efficiency ratings. All right, and with all of that covered, let's go ahead and crack on with some news. As y'all know from last week's live stream, we covered Compute North's Chapter 11 bankruptcy. We released a weekday newsletter last week that kind of covered the bankruptcy filing in depth, as well as one of the most recent developments with this bankruptcy, which is Compute North filing for a 363 asset sale. So there's a few ground rules really quickly. A Chapter 11 bankruptcy is often referred to as a reorganization bankruptcy. And what that means is it gives the bankrupted company the opportunity to restructure its business in such a way where it can pay off debts and potentially continue operating in the future. Now, this sometimes looks, this usually occurs in one of two ways. One, someone comes in and covers the debt by buying out equity in the company and taking control of it. Or two, the company sells assets in order to cover its outstanding debt. And according to this filing, it's looking like, so far at least, Compute North is opting for the latter, where they're going to try to sell assets in a 363 asset sale to cover the debt that it has outstanding. Now, that outstanding debt is some $266 million. And a lot of that debt is owed, or I would say the majority of that debt is owed between different parties, but one of the largest creditors that Compute North has is its primary lender, Generate Capital, and it owes Compute North owes Generate about $101 million right here, as you can see in this figure. And that debt so far is guaranteed by Generate Capital seizing $26 million in cash assets through a bank account that Compute North owns, and also two of Compute North facilities, one in Nebraska, Kearney, Nebraska, and the other in Texas. I believe it is, Granbury, Texas, the Wolf Hollow facility. So as far as I understand, and I could be wrong, but based on the filings, as I understand it, because Generate Capital has seized those assets, this debt so far is not part of the equation. And the debt that is most pressing for Compute North is, let's see, I believe it's 148 million that is owed to a bunch of different players. Let's see. Oh yeah, that's down here. So these obligations include 99.8 million in a secured promissory note to Next Ezra, 21 million that is an unsecured promissory note to Marathon Digital, and another 7.46 million which it owes to Foundry for equipment financing. And it's a grand total of, let's see, $146 million when we include $18 million in other unsecured debt that is shared between about 30 creditors. So all of that to say, currently Compute North is on the hook for $146 million. That is notwithstanding the $101 million that it owes to Generate Capital, which, like I said, should be covered by Generate Capital seizing Compute North's Kearney, Nebraska, and Granbury, Texas facilities, as well as $26 million in the bank. So what does that mean for how Compute North is going to pay it off? We won't cover, why did Compute North go bankrupt in depth here, but just to kind of recap that, mining economics are worsening across the board for everyone. Only those with the cheapest cost of power, and there aren't many of them, and the most efficient machines are still having healthy margins. And Compute North during this, worsening mining economic period did not have PPAs, long-term PPAs in place, so its power costs are going up, and now it can no longer make any sustainable margins on its hosting business. And in addition to that, Generate Capital, its primary lender, shut off its its credit faucet. So that the combination of those two things really kind of put it under, so to speak. So in order to try to dig itself out of this hole, Compute North is planning to liquidate assets in a 363 sale. Now, a 363 sale per the U.S. Bankruptcy Code allows a bankrupted company to sell assets and auction off assets in order to pay down debt. For Compute North, this will take two forms. It is going to have and no one make fun of me because I'm about to butcher this pronunciation, even though I took way too many years of French to be doing this. They are going to have a de minimis sale that is going to not exceed $1 million. So basically, this sale will be an outright sale of assets to whoever Compute North approaches, or to whoever approaches Compute North for certain assets like containers. You can imagine probably a lot of actual miners from Compute North's self-mining operation will be sold in this de minimis sale. and as well as other electrical equipment, maybe like transformers and things like that. And the important thing to note here is that the assets that it sells in this initial stage cannot exceed $1 million. So the total aggregate selling from this sale cannot exceed $1 million, and that's because this is really just to kind of cover costs, maybe payroll, court fees, things like that for the meantime. But the overwhelming majority of Compute North's assets will then be sold in an auction. Now, this auction will take place on November 1st. The deadline for placing an initial bid is October 7th. And this auction can also include what they call stalking horse bidders. Now, a stalking horse bidder is basically someone that Compute North approaches and asks if they will guarantee a sale price for a certain asset. So the bankruptcy